Welcome back, ladies and gentlemen, to the Tantalus Systems channel, empowering the electrified future with smart grid solutions. We're going to be diving down into the earnings of this company today with Chief Executive Officer Peter Londo. Welcome back, sir.
Kyle, good to see you. How are you today?
Living the dream as always, and a pleasure to get you back on, especially during these recessionary periods, to see the advancement in your company. And I want to really highlight some of these numbers and help hopefully just divulge exactly what's going on under the hood there at Tantalus Systems. So first and foremost, Q2 revenue, 9.1 million USD. That was a 13% year over year growth. On top of that, you did show negative EBITDA as you kind of expanded on R&D, and your gross profit margins were 46%. So first and foremost, let's talk about what's driving the revenue growth, and then maybe we'll expand on the EBITDA.
Yeah, sure. So we're excited to deliver the Q2 results and really pleased in the aggregate, given how challenging the broader economic footprint is and the broader market right now. The revenue growth year over year is just a continued example of the value that we are bringing to utilities and our ability to really convert opportunities out of the pipeline. Some of the underlying numbers that go into revenue for us, Kyle, are the number of utilities we can convert in a quarter. In Q2, we converted 5 new utilities. So our user community is now over 260 utilities across the United States, Canada, and Caribbean region. The revenue growth through Q2 and through the first half is really also anchored by the backlog and revenue visibility that we had going into the calendar year. So really, really pleased with the top line. And I just add on top of that, we did witness some supply chain constraints in Q2. We had about $1 million of scheduled revenue shift out of Q2 into future periods. So we still are navigating through some of those issues that we've talked about previously, but overall a great quarter, a great first half of the year for us, and I think we're really well positioned for the second half.
That's incredible. And I wouldn't mind if you can expand a little bit there, because as you kind of really focus on the research and development side, you saw record order conversions when you're expanding these utility clients. Can you kind of just expand on what you're seeing from the ground level there when you're talking about converting some of these clients?
As you may recall, we're helping electric utilities. We're trying to convince them to buy our comprehensive technology platform to digitize their grid. We go through a sales process to try to convince those utilities to deploy our system. And then once we lock into these utilities, right, we're there for multi-decade durations. So winning a utility up front is important because it leads to ongoing opportunity long-term for the business. So in the first half of this year, we set a record in our company's history by converting $24.7 million of orders out of our qualified pipeline. That's in USD, so 24.7 million US dollars of converted opportunities out of our pipeline. That is up 44% year over year. It represents a book-to-bill ratio of 1 to 1.35. And I think it's just another great example of our sales organization being able to articulate the differentiation of what we do and convincing new utilities to select us as their long-term partner. So a great accomplishment for us through the first 6 months of the year.
Yeah, and is really kind of adhering to this kind of robust growth that you guys are experiencing. And just kind of during these tumultuous times, I'm sure there's a lot of questions from a balance sheet perspective. You guys are sitting on 9.8 million in cash. How do you feel about your current balance sheet situation moving forward?
Yeah, so in addition to that $9.8 million of cash, the adjusted working capital remains very strong as well. The balance sheet continues to be as strong as it's been in our company's history. The balance sheet strength is allowing us to make some very near-term R&D investments, which you highlighted a few moments ago. While those R&D investments today, we expense our R&D, so those investments today translate into negatively impacting EBITDA in the near term, but we're investing heavily really in 3 key areas. The first is something referred to as our TrueSense IP gateway. It is a new solution. It will be the first of its kind to the market. We are anticipating bringing out an alpha version later this year. What the solution will do is enable utilities for the first time to truly upgrade their metering capabilities and not only collect the meter data that we've been focused on, power quality and consumption data, but we're going to give the utilities the ability to go behind the meter with connectivity to access and control EV charging EV charging stations, rooftop solar inverters, power walls, or other smart appliances, so that the utility can be that much more granular in the control of the grid as rooftop solar panels, battery walls, and EVs all start to surface within their distribution grid. So that's one, it's a heavy lift for us. The second R&D initiative where we are investing is sort of the software side of that solution through the acquisition we made of Congruitive. We announced that earlier this year, as you may recall. And Congruitive is a software interface that takes the data from all these different types of EV charging infrastructure devices or rooftop solar inverters or storage devices or power walls, and it normalizes that data, harmonizes it into one standard protocol that the utility can then integrate. So we've got the device side, the TrueSense Gateway, the software side through Congruitive. It will put Tantalus at the forefront of this emerging market opportunity to help utilities integrate these types of devices. And then last but not least, the third big area of focus is continuing to put money behind our artificial intelligence enabled data analytics tool. You may recall that's called the Tantalus Grid Reliability Analytics Solution, TGRA. We launched that towards the end of last year. We now have over 40 utilities within our existing customer base that are either already subscribed under a SaaS offering, piloting, or waiting for a pilot to be activated. So we're seeing great response from the power of that analytics tool to drive SaaS revenue moving forward. And we're starting to think about how we expand those capabilities to target other assets with artificial intelligence enabled analytics. So three big areas. The balance sheet's allowing us to make those investments. It does have near-term effect from an EBITDA perspective, but we think it really positions us long-term for much more substantial growth year over year.
On that note, I think it was incredibly insightful, and I appreciate your time today. I'm going to pass the question off to the viewers. We'd love to know what you guys think about all this in that comment section below. Consider subscribing, because as news continues to come down the wire, we'll update you here, of course. But stay cool, stay awesome, and as always, we look forward to catching you in the next one.